Hey guys, welcome back to another episode. Normally, I take a quick look at some growth stocks, but today I want it to be a bit different. I want to take a quick look at some of these big players. I'm going to take a quick look at Microsoft and Disney today. Microsoft, for those not familiar, in the past 3 months has done numerous acquisitions, which I think is pretty impressive. And I think Disney might be sitting at some attractive levels, but let's find out in today's episode. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment for 10 free stock ideas right now. So let's get started. So if we take a quick look at price actions off the highs, Microsoft right now is only down about 4% from its highs right now. So it hasn't seen that much of a pullback. Unlike Disney right now is down about 14.11% from its all-time highs. And we're going to see in a bit why the stock price has fallen down. But let's jump in. Microsoft today is sitting at $293 with a market cap of $2.2 trillion. Like I mentioned, Microsoft in the past 3 months, on the past 3 to 4 months since June 2nd, it has done 8 acquisitions in the past since June 2nd. So that's it. So let's take a quick look at what type of companies they're buying. One of the companies they bought was Reform Labs. Reform Labs focuses on IoT security challenges. So it's pretty much kind of creating security for connected devices. A lot of smart home products right now, they need to be secure, make sure they don't get hacked or anything like that. So this goes well with their cloud services that Azure Defender has. Then they also bought Risk IQ. Risk IQ, security intelligence for what matters. Again, they're really focusing on these kind of cyber threats. So those were 2 acquisitions. Then if we move, they also purchased this company called CloudKnox. And CloudKnox kind of focuses in a management platform for businesses. So this is pretty much goes on their, I want to say on their business and productivity section. Next, they bought Supply, right? This is a software that helps with procurement terms, management costs, cash flow for companies. So this is another one that goes in that productivity and business market. Next, they bought Peer 5. This is a way for them to deliver high quality video. We can see, I feel like Microsoft is trying to create, it is becoming this super master with its Azure product and just being able to deliver different types of solutions for their customers. So Peer 5 was also purchased. Another one they bought was Clipchamp. Clipchamp is a way to kind of free video editor to create beautiful videos today. So this was an interesting buy. I don't see too much growth in this. Maybe again, just another amount of solutions of creating more productivity solutions for the customers. Another one they bought was Take Lessons, and this is pretty much like a marketplace for instruments. I think this probably goes well with kind of LinkedIn and kind of creating that kind of marketplace with LinkedIn. Right, so that could work well there. And the most recent one was Ally, and Ally is a software that turns your goals into results. This is pretty much, I want to say, something that could work really well with LinkedIn as well. So I mean, Microsoft, like I mentioned, in the past few months has done numerous acquisitions, and I don't believe this is going to stop anytime soon. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. Now let's take a quick look at Disney, right? Disney we saw was a bit different from its 52-week high. The stock has dropped over 14%. And we're going to see why. Disney, something to keep in mind of if you are an investor, November 10th of 2021, this is when they're going to give their full year and Q4 earnings results. So that's about a month from now. So Disney, one of the biggest issues, they've actually seen a few roadmaps, right? The first thing is earlier in September, I believe, the overall CEO came out and said that, hey, Delta variant right now is producing a bit of delay on productions. This delay on production is going to kind of trickle down, and we're going to see lower numbers in growth in Disney Plus and stuff like that. And that's what's really causing Disney stock to kind of take a hit due to this slowdown in growth. Another roadblock is Disney meets some more roadblocks releasing movies in China. What's new? Some movies that Disney is expected to release this upcoming year at the moment still have no, I want to say, no actual date in China, and one doesn't know if they're gonna happen. One of them is Shang-Chi, which was one of the best movies this year in the United States. It was supposed to come out in China, but at the moment it has yet to have a release date. Another one, and Chinese, it seems to be like the Chinese market seems to be strong for movies. Over the October 1st weekend, there was a Chinese war epic movie, The Battle at Lake. Grossed over 200 millions in its first weekend release. So it's definitely kind of hurting Disney for them not being able to release within that market, because there is a market there and they can make plenty of money. Finally, a little bit more bearish sides on Disney right now is they have had some veterans kind of leave Disney just for pretty much retirement or new workforce. For example, today on October 12, 2021, veteran Alan Horn to retire as Disney studio head. He was one that was the oversaw movies like Avengers Endgame, Black Panther, Star Wars The Force Awakens, some of the highest grossing domestic releases in history. So he's kind of retiring, so they have to add new leadership in his position. They also had another executive or kind of leadership step down. Camp Bell, she stepped down as the president of Walt Disney's Hulu earlier this month after more than 4 years at the streaming services. So there are some changes in leadership, which could be, I want to say, some bearish sentiment for investors. I do believe that's why the stock price is down about 14%. But if we take a quick look at EV to EBITDA forward ratios, I mean, Microsoft right now sitting at about 22.94, a bit higher compared to where it's been since 2020, but not the high it has been. So I want to say for Microsoft, for me, I believe it's a dollar cost averaging time. For Disney, it's a whole different story. Forward EV to EBITDA is actually one of the cheapest or lowest levels it's ever been. So for Disney, I do believe this might be a nice buying opportunity. Time to increase exposure if one doesn't have a big exposure. But remember, position sizing is super important. If we take a quick look at technicals, it seems like Disney is just sitting at these levels right now of 170 and just waiting for something. I'm guessing we're waiting for those earnings. If Disney Plus doesn't do as strong, as theme parks don't do as strong, this can definitely see quite a pullback, but definitely I want to say sitting at attractive levels. Microsoft, on the other hand, I want to say this is one that's been ripping, doing amazing in the past few months. So right now, like I mentioned, more of a dollar cost averaging position. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.